I lost $47,000 in 3 months because I couldn't stop revenge trading. Every red candle felt personal. Every losing position became a battle I had to win. My account balance bled out while I convinced myself the next trade would fix everything. That was 4 years ago, and what I'm about to share isn't theory from a textbook. These are the 5 specific habits that rewired my brain and turned me from an emotional gambler into a trader who actually makes consistent money. The first habit is writing down my emotional state before every single trade. Not after, before. I keep a simple document open on my second monitor with 3 columns: time, emotion, and intensity from 1 to 10. Before I click buy or sell, I type what I'm feeling. Anxious, 7. Confident, 9. Bored, 4. Angry, 8. This takes 15 seconds, and it sounds useless until you review it at the end of the week. Here's what happened when I started doing this. I noticed I made my worst trades when I logged emotions above 7 in any direction. Overconfident at 9 after 3 wins, that's when I doubled my position size and got destroyed. Anxious at 8 after a loss, that's when I entered terrible setups just to feel like I was doing something. The pattern became impossible to ignore. I wasn't losing because of bad strategy. I was losing because I traded when my nervous system was hijacked. Now I have a hard rule. If I write down any emotion above 6, I step away for 20 minutes. I don't negotiate with myself. I don't make exceptions. The trade will either still be there in 20 minutes or it won't. And if it's gone, that's fine, because I would have executed it from a compromised mental state anyway. This single habit cut my losing trades by 40% in the first month. The second habit is setting a maximum number of trades per day, and this number is lower than you think. For me, it's 3. Not 30, not 10, 3. Most traders think more screen time equals more opportunities, but that's not how probability works in markets driven by human emotion and algorithmic execution. Every trade you take depletes your decision-making energy. Psychologists call this decision fatigue, and it's why you can analyze charts perfectly at 9:30 in the morning, but by 2:00 in the afternoon you're entering positions that make no sense. Your brain is tired, your pattern recognition is slower, your risk assessment is impaired, but you don't feel tired, so you keep trading, and that's when you give back all your morning profits plus more. I tested this systematically. For 2 months, I tracked every trade and marked whether it was my first, second, third, fourth, or fifth trade of the day. My win rate on trades 1 through 3 was 62%. My win rate on trades 4 and above was 38%. The data was clear. I was a profitable trader for 3 trades. Then I became a losing trader who was too stubborn to stop. Now I take my 3 trades and I'm done. Some days I only take 1. Some days I take 0. This feels wrong at first because trading culture celebrates the grind, the hustle, the person staring at charts for 12 hours. But those people aren't making money. They're staying busy, and busy feels productive, but it's not the same as profitable. The 3 trade limit forced me to become selective. I stopped chasing. I stopped trading out of boredom. I started waiting for setups that actually met my criteria instead of convincing myself marginal setups were good enough. My account grew not because I traded more, but because I traded less. The third habit is spending the first hour of every trading day reviewing my previous 5 losing trades. Not my winners, my losers. I open my trading journal, I pull up the charts, and I reconstruct exactly what I was thinking when I entered each position. This is uncomfortable, and that's the point. Most traders avoid their losses. They glance at them, feel bad for a few seconds, then move on to find the next trade. This is a mistake because your losses contain all the information you need to stop repeating the same errors. Your winners are mostly luck and timing. Your losers are patterns of psychological weakness that will bankrupt you if you don't study them. When I review a losing trade, I'm looking for specific things. Did I enter before my setup was complete? Did I ignore my risk parameters? Did I add to a losing position? Did I move my stop loss to avoid taking the loss? Did I enter because I was bored or frustrated? Every losing trade falls into one of these categories, and once you identify the pattern, you can create a rule to prevent it. For example, I noticed I kept entering trades 30 seconds before my actual signal triggered because I was afraid of missing the move. The price would approach my entry level, I'd get excited, and I'd jump in early. Then the price would reverse, stop me out, and continue in my original direction without me. This happened 17 times before I admitted it was a pattern, so I created a rule. I set an alert at my entry price, and when it triggers, I wait 60 seconds before I'm allowed to enter. Just 60 seconds. If the setup is real, it'll still be there. This simple delay eliminated the problem because it disrupted the emotional impulse. That one adjustment added $8,000 to my account over the next 3 months. The fourth habit is keeping my winner to loser ratio visible at all times. I built a simple spreadsheet that updates automatically with every trade I close. It shows me my win rate, my average win size, my average loss size, and my profit factor. These numbers sit in the corner of my main monitor, and I see them every time I look at a chart. This matters because trading is a probability game that your brain isn't designed to understand. We're wired to remember recent events more strongly than statistical patterns. You can take 5 winning trades, feel like a genius, then take one large losing trade that wipes out all your progress. But because the wins are more recent in your memory, you still feel successful. Your emotions are lying to you, but your statistics don't lie. When I see my actual numbers in real time, I can't deceive myself. If my win rate drops below 55%, I know something is wrong with my execution. If my average loss is growing larger than my average win, I know I'm not cutting losers fast enough. If my profit factor drops below 0.5, I know I need to stop trading and review my process. These numbers also prevent me from overtrading after wins. When I take 2 profitable trades and I'm feeling confident, I look at my stats and I see I'm still only up 1.2% for the week. That confidence evaporates. I remember I'm not a trading god. I'm a person following a system, and the system says I have 1 trade left today, so I better make it count. The visibility creates accountability. You can't pretend you're doing well when the math is staring at you. You can't blame bad luck when your average loss is 3 times your average win. The numbers force you to confront reality, and reality is where discipline lives. The 5th habit is the one that changed everything, and it's going to sound extreme. I trade with only 60% of my intended position size, and the other 40% doesn't exist. I never add to winners. I never scale in. I never average down. I enter with 60%, and that's the only capital that touches the market. This goes against everything you read about position sizing and pyramiding into trends, but here's why it works. The biggest account destroying mistakes happen when you're already in a trade. You're up 20% and you think the trend will continue forever, so you add more. Now you're overexposed. The position reverses. You panic. You either take a huge loss or you hold too long and watch your profit disappear. Or worse, you're down 15% and you average down to lower your cost basis. The position continues against you. Now you're down 30% on a position that's twice the size it should be. You're stuck. You can't cut it without massive pain. So you hold and hope is not a trading strategy. By limiting myself to 60% of what I think I should trade, I remove the ability to make these mistakes. I can't add to a winner because the capital isn't allocated. I can't average down because the money doesn't exist. The position size I enter with is the position size I exit with. This creates a forced discipline that my emotional brain can't negotiate with. The interesting part is what happens psychologically. When you know you can't add to a position, you become much more careful about your entry. You wait for better prices. You're more patient. You're not thinking about how you'll scale in later. You're thinking about whether this single entry at this exact price is worth the risk. This habit also eliminates a subtle form of gambling that most traders don't recognize. When you can add to positions, you're always partially hoping the trade moves against you so you can get a better average price. This hope corrupts your analysis. You start seeing reasons to add instead of reasons to exit. You become attached to being right instead of being profitable. With the 60% rule, I'm never hoping for anything except for my analysis to be correct at the entry price I chose. If it's correct, I make money. If it's wrong, I take a small loss and move on. There's no complexity, no second guessing, no what-ifs about whether I should have added more. My position sizes feel small now. Every trade feels slightly underwhelming compared to what I used to do. But my account grows steadily month after month because I'm not taking the catastrophic losses that used to wipe out weeks of progress. The trades I do take are cleaner, more confident, and more aligned with my actual strategy. These 5 habits work together as a system. The emotional tracking prevents me from trading in compromised states. The 3 trade limit prevents decision fatigue. The loss review prevents repeated mistakes. The visible statistics prevent self-deception. The 60% position sizing prevents catastrophic errors. None of them are complicated. None of them require special software or secret indicators. They're all behavioral constraints that force discipline when motivation fails. Because here's the truth about discipline in trading. It's not about willpower. Willpower depletes. Willpower fails when you're tired, stressed, or overconfident. You can't rely on being strong enough to make good decisions every single time. You need systems that make bad decisions impossible or at least much harder to execute. That's what these habits do. They create friction between your emotional impulses and your actual trades. They slow you down. They make you think. They force you to confront data instead of feelings. And over time, that friction rewires how you approach the market. I don't feel the urge to revenge trade anymore. When I take a loss, I feel nothing. I close the position, I mark it in my journal, I move on. I don't feel the need to make the money back immediately. I don't feel like the market owes me anything. The loss is just data, and the data tells me whether whether my system is working or needs adjustment. I don't overtrade anymore. I can sit in front of my screens for an hour and take 0 trades without feeling like I'm wasting time. I'm waiting for my setups, and if they don't appear, that's fine. I'm not getting paid to be busy. I'm getting paid to execute high probability setups with proper risk management. I don't blow up my account anymore. My worst month in the last 2 years was down 3.7%. That's it. No catastrophic losses. No weeks where I lost everything I made the previous month. Just consistent, boring, profitable trading that compounds over time. This is what discipline looks like in practice. It's not exciting. It's not about making huge returns in a single trade. It's about showing up every day, following your rules even when they're uncomfortable, and trusting that the statistical edge will play out over hundreds of trades. The market will always offer opportunities to break your rules. There will always be a setup that looks so perfect you convince yourself you can take a 4th trade. There will always be a winning position that's begging you to add more size. There will always be a losing trade that feels like it has to reverse if you just hold a little longer. Discipline is saying no to all of that. It's trusting your system more than your feelings. It's accepting that you'll miss some profitable trades because you were following your rules, and knowing that's better than taking unprofitable trades because you weren't. These habits aren't optional for me anymore. They're as fundamental to my trading as having a chart open. I don't decide each day whether I'll track my emotions or limit my trades. I just do it. The same way I brush my teeth or check my positions before the market closes. That's the final shift that happens when you build real discipline. The habits stop being something you force yourself to do and become something you can't imagine not doing. You've rewired your behavior so completely that trading without these constraints would feel wrong, like driving without a seatbelt or walking into a meeting unprepared. If you're struggling with discipline, you don't need more motivation. You don't need to watch more videos about the trader mindset. You need specific, concrete habits that remove the opportunity to make emotional decisions. You need systems that work even when you're tired, frustrated, or overconfident. Start with one habit. Track your emotions before every trade for 2 weeks and review the data. That's it. Don't try to implement all 5 at once. Don't try to become perfectly disciplined overnight. Just build one habit until it's automatic, then add the next one. The trading game isn't about finding the perfect strategy or the secret indicator. It's about managing yourself, your emotions, your energy, your decision-making capacity, your risk exposure. The traders who survive long enough to actually make money are the ones who figured out how to manage themselves first and the market second. These 5 habits forced me to become disciplined because they made undisciplined trading nearly impossible. They created boundaries I couldn't cross without deliberately breaking my own rules. And breaking your own rules feels different than just making a bad trade. It creates accountability that emotional trading doesn't have. 4 years ago, I was broke, frustrated, and convinced I'd never figure this out. Today, I'm profitable, calm, and trading feels almost boring. That's exactly what I want. Boring and profitable beats exciting and broke every single time. Build the habits. Trust the process. Let discipline become your default instead of something you have to manufacture every morning.